Hi everyone, today's podcast is on IFRS 5 non-current asset held for sale and discontinued operation. It's not a very basic podcast, but it's a very tricky and selective review of this IFRS 5 non-current asset held for sale. Beginning with, what is disposal group? A disposal group is a group of assets to be disposed in a single transaction, and liabilities associated with those assets will be transferred in the transaction. To simplify it, it is the disposal of assets along with their respective liabilities are settled. So what an entity shall classify a non-current asset held for sale if its carrying amount will be recovered principally through a sales transaction rather than continuing use. So when is going to be an asset classified as held for sale under the IFRS 5? When an entity or an organization or business is going to recover the principal amount, carrying amount will be recovered through the sales, not rather than continuing use. Now, what is the criteria for classifying held for sale? There is a very stringent criteria given by IFRS 5 to classify asset as a current asset and non-current asset in IFRS 5 held for sale. First condition is available for immediate sale in the present condition. Immediate sale in the present condition means no repair, no furnishing, no renovation, nothing in the present condition. The second condition is the sale must be highly probable. Now, how this highly probable sale criteria is going to be gauged? That is, first is price must be reasonable. Price should be reasonable. Price can be market value, market terms. Second criteria is under the highly probable sale is unlikely. It is unlikely that a change to the plan will be made. Change to the plan, either delaying the sale of asset or either not selling the asset. So next is management is committed to sale, means organization, business, or we simply say management is committed to sell. Next criteria is, fourth criteria is active program to locate buyer is initiated. This can be elaborated by you have posted the ads in the newspaper to locate the buyer. And the next criteria, sale is probable within 1 year. Sale is probable within 1 year. It is expected that the asset will be sold in the time period of 1 year. So, what are the criteria for classifying asset for held sale? It should be available for immediate sale in the present condition. And the next criteria, sale should be probable. And you know the probable criteria: price should be reasonable, no change, unlikely to be the change in the plan, management is committed to sale, active program to locate a buyer is initiated, a sale is probable or expected within 1 year's time. So what's the definition of of held for sale? Non-current asset is classified as held for sale if the carrying amount will be recovered primarily through sale rather than continuing use. This is the definition given by IFRS 5. Now, what is the approach? Okay, now so what happened if the asset previously classified under IFRS 5 held for sale, and no longer, what happened if at the year end the asset is no longer classified as held for sale, means now the criteria is not met, or the business is not intent to sell the asset. So if asset is no longer have to be classified as held for sale, then asset is measured at the lower of carrying amount as IFRS 5 was never applied, or recoverable amount at that date. If the asset is no longer classified as held for sale, then asset will be measured at the lower of carrying assets carrying amount as IFRS 5 was never applied, or recoverable amount at the date. It will be the lower of the entire figure. Now what happens if asset to be abandoned? Non-current assets to be abandoned are not classified as held for sale, since their carrying amount will be recovered principally through continuing use. Asset will continue as per IAS 16. So it's another aspect we have to look carefully in any of the question in an exam or in any scenario, that either the asset is going to be abandoned, like I'm going to use this asset for its entire life and then going to retire it, or I'm going to recover the benefits of it by using it. So abandon is I'm going to dispose it, or I'm going to discard it, or I'm going to use till its life. So this type of asset is not obviously classified as per se. Example is that asset that is going to be used till their used to the end of their economic life, and or the assets that are closed, like a business setup is being closed rather than being sold. Now moving forward, what is the treatment, what is the aspect of when a non-current asset held for sale is sold? Gain or loss will be recognized. Gain and loss that will be recognized in income statement, and any previous revaluation reserve will be transferred to retained earning as per IAS 16. This is when a non-current asset held for sale is sold. What are the gain or loss whatsoever will be recognized in income statement, and any previous revaluation reserve as per IAS 16 will be transferred to retained earning. Now the other aspect is non-current asset held for sale in the next reporting period is not yet sold. I classified this car or this building as held for sale, and an entire year is being lapsed and the asset is not yet sold. So IFRS 5 says reassess the IFRS 5 condition. There will be two aspects when we are going to reassess the condition. First is IFRS 5 condition will be met, or IFRS condition will not be met. So what if IFRS 5 conditions are met? IFRS 5 will continue, but there will be some change in the value. Asset will be measured at the lower of carrying amount as per the previous IFRS, and the lower of fair value less cost to sale. If carrying amount is greater than the fair value less cost to sale, impairment loss, and if it is not, then there will be a reversal of impairment. Reversal of impairment to the extent that asset was never depreciated, asset had not been impaired before as per IFRS 5. So when we reassess the conditions of IFRS 5 and asset is not sold, and if IFRS conditions are met, the asset will be measured lower of the carrying amount as per the previous IFRS that is applied in the last year, and fair value less cost to sale. Obviously, if the carrying amount is greater than fair value less cost to sale, asset is going to be depreciated. If fair value is greater than the carrying amount, asset is going to be, if there is there's going to be reversal of impairment. Now what if IFRS not continue? Means the condition suggested by IFRS 5 is not being met. If the conditions are not being met, the asset will be transferred from IFRS 5 to IAS 16, property, plant and equipment, and asset will be measured at the lower of the cost of the carrying amount as per IFRS 5 was never applied, or recoverable amount at that date. If IFRS 5 conditions are not met and we are not going to continue the asset will be transferred from IFRS 5 to IAS 16 and will be measured at the lower of cost or cost of carrying amount as per IFRS 5 was never applied, and recoverable amount whatsoever will be lower of. Discontinued operations. What are discontinued operations? Discontinued operation is a component of an entity that has to be disposed of or classified as held for sale. What is a discontinued operation? It is a component of an entity that either has been disposed of or classified as held for sale. And what are discontinued operation criteria? It is for given by IFRS 5, that is separate line of business or geographical area. There are three conditions. First is, second is part of a single coordinated plan, and the third condition is subsidiary acquired exclusively with a view to resale. So these are the conditions given by IFRS 5 discontinued operation, that is a component of an entity that has to be disposed of, either it's been disposed or classified as held for sale, that is line of a business or geographical area, single coordinated plan, and the subsidiary acquired exclusively with a view to resale. On the face of statement of profit and loss and other comprehensive income, a single amount comprising the total of post-tax profit or loss of discontinued operation and a post-tax gain or loss on the remeasurement to fair value less cost to sale or on disposal will be shown in the statement of face of income statement. So for discontinued operation, what will be the reporting in the income statement on the face of statement of profit, loss and other comprehensive income? We will show a single amount comprising of these two figures. First is post-tax profit and loss of discontinued, whatsoever the profit or loss is being made by this discontinued operation, and the second is any gain or loss on the remeasurement to fair value less cost to sale or on disposal. Either the asset is disposed, then there will be of any gain and loss on disposal, and if the asset is not disposed, then the gain and loss will be on the remeasurement of fair value less cost to sale. Now, what is subsidiary held for sale? When an entity is committed to a sale plan involving loss of control but retention of non-controlling interest, the asset and liabilities of subsidiary are still classified as held for sale and disclosed as a discontinued operation. To explain it, I am going to give an example. There are times when company acquire companies. A company acquire another company with a view to sell it. Like you acquire a car and you with a view that you are going to sell it. Same like it, a company acquire the asset with a view to sell it. So what happened to a subsidiary acquired with a view to sell? When an entity is committed to a sale plan involving loss of a control, there are two aspects. There is loss of control. The control definition will be given in the respective standard. But retention of non-controlling interest means the percentage will be less than 50%. Loss of control means you are going to sell your more than 51% shares. But retention of non-controlling interest means you have non-controlling interest. You have some interest, but it's not a control over that subsidiary. In that condition, the asset and liabilities of the subsidiary still classified as held for sale and disclosed as a discontinued operation. Okay, what is the treatment? Other aspect is, what is the treatment of non-current asset revaluation model? When an asset in a revaluation model is when an asset as per IAS 16 held at the revaluation model is transferred to IFRS 5, non-current asset held for sale. So when an asset is transferred from IAS 16 revaluation model and it meets the criteria for held for sale, it should be revaluated to fair value immediately before being classified as held for sale. It is then revalued again at the lower of fair value less cost to sale and carrying amount. The difference between the selling cost and these should be charged to profit and loss. So this marks the end of the podcast for IFRS 5, non-current asset held for sale and discontinued operation. It's a very simple but a tricky standard. Do give me your feedback in the comment section, how you like it, how you find it, and if you want, I would like you all to suggest me any other standard you want me to review. Please do suggest. I'm waiting for your reply. Goodbye.